Earlier this year, the experts told you to expect 6 rate cuts. It had since been dropped to 3 with the last Fed dot plot. Now, according to Barron's article over the weekend, you should expect 0 rate cuts in 2024. What the heck is going on? We've got the one and only Taylor from Life Goal Investments, a 10-year Wall Street veteran, to help us diagnose how we went from 6 to 0. I don't get it. What happened?
Boy, that is a swing of epic proportions, isn't it? Yeah, we're gonna cut by 150 basis points, 1.5%. Mortgage rates are gonna come down 1 to 3%, etc. Nope, none of that's happening. It's been funny. And by the way, did we not say this was coming? You and I? I mean,
we did. We got receipts, baby. We got receipts.
Yeah, exactly. No, it's funny. The market got way over its skis. And I don't blame the market for thinking that rate cuts were coming with the trajectory of inflation coming down. But the rate at which they were expecting them of 6, I even saw 7 in some places, was nothing short of ludicrous, right? So, like, to frame it up contextually, and we'll just use headline CPI as the kind of case point here. Sure. Mid-2022, headline inflation hits 9.1% in June, right? And then it precipitates downwards consistently, basically every month for a year, over a year.
Over a year, so, I think 15 months. Yeah, I think we had a downtrend.
15 months of a perpetual downward swing. And then what happened, and this is where I started to come dislocated from the market in a big way, was it started to jump sideways. And it stayed sideways starting in fall of 2023. And the market continuously said, and the Fed screwed up here. The Fed said in late 2023, when it became a little bit more evident that it wasn't dissipating as quickly, hey, we continue to think that we'll see interest rate cuts in 2024. And they did see that. They did think that that was coming, but they were fueling a fire at the time that was saying 4 interest rates were coming. Then they said, yes, rate cuts are coming. And then all of a sudden, whoosh, right? The inferno picks up to 6 interest rate cuts and the market absolutely explodes. And now we're on the other end of that.
Yeah, I think it's really interesting. Again, we have receipts. We go back. And I remember in December, Powell and the team were kind of declaring victory, right? They were saying, hey, we're almost 100%. Through this. And then Q1, I think we had like 9 of the 10 inflation reports consistently worse than expected. And now, we've just, I think we've just gotten the March data. We got it in April. No, wait, where are we? We're in June now. God, we're in June already. Crazy. It's pretty sideways. In fact, PCE was sideways again, month to month. We seem to be stuck in this high 2s. And, I think there's actually growing rumblings that inflation might pick up from here. What are you kind of seeing there?
No doubt. Earlier this year, I remember a specific conversation that I had with you, and you said, hey, what's the odds that we get 0 interest rate cuts? And this is when 6 to 6.5 were priced in the market. And I said 30%. And you were right there with me. And people were like, you're crazy. No interest rate cuts.
I remember the comments.
You remember that?
Comments.
They were going crazy. And we're like, look at the underlying price of commodities is a big one. Yeah. Look at what commodities have done. They have consistently moved upwards. Now, oil's traded off just a little bit recently, but outside of that, the big metals industries, they are all seeing higher prices and inflation, and that gets pushed through. And by the way, oil is trading off a little bit, but oil went on a 30% rise to begin the year. And that is an input cost on everything. And that's why, so like when we talk to clients, we're wealth managers. When we talk to clients, we have oil in almost every portfolio, not to a big extent, but the reason we do is not because we love oil or think that oil is going to the moon. It's because when oil is doing well, it's a problem to all the other asset classes. Stocks, bonds, inflation is a problem to them. So if you can have that as the counterbalance of at least something doing really well, if inflation really picks back up again, it's a huge win at the end of the day. So yeah, you're seeing now inflation trending sideways, ticking up in places, and it's not something that the market is taking with a ton of comfort. And I'm actually surprised that the market's done as well dealing with it as it has. And some of that has come from earnings. Earnings were relatively strong in Q1, and they were really strong on the big names, right? So the big names carried the buck. If you backed out the Mag 7 names or the Mag 5, because 2 of the Mag 7 weren't great. If you back out those big 5 names, earnings were negative year over year again. So
Yeah.
it was a tale of two stories there when you look at 5 behemoths that absolutely blew it out, and then you look at the rest of the underlying, 495 companies in the S&P 500, they were negative.
Yeah, one of the things that you've heard me talk about and we've debated is I've wanted the Fed and specifically Powell to threaten to go higher.
Yeah.
Right? I've been begging for the threat. Michelle Bowman came out and did it. I think Neil Kashkari hinted it's not out of the realm of possibilities. I mean, are you still in the camp that rate increases are off the table, or are you in the camp that, you know what, one might have to happen?
For the most part, I'm in the camp that they're off the table. So I would love to be this huge Fed hater, to be honest with
Mm,
you. It would get a lot more clicks and a lot more likes. Candidly, I am not. So if you were I've done this before. I scored Jerome Powell a B plus. His grade is
mm,
getting a little bit worse, so it might be dropping down to a B with the more recent comments and kind of the evaluation that I gave you there. But if you rewind back to the beginning, like they were absolutely crucified in the fact that they didn't raise quickly enough in the
right.
early days. And I kind of supported them. I said, listen, if you remember back to call it late 2021, when inflation was picking up and it was becoming evident that it was a little bit ingrained, the big scare at the time, though, that people forget about is okay, COVID variant 1, COVID variant 2, and I
Yeah.
don't remember what they were calling them. If those came to fruition and did actually have another outsized impact like the original COVID did, that could have forced us. And so, say the Fed raised rates and then one of those variants hit, that could have forced us into legitimate deflation and sustained deflation, which is the world's biggest problem. Sounds like a
Mm,
great problem. It's not, because people just put their hands in their pocket and say, I'm not buying anything because it'll
right.
be cheaper tomorrow. Now, so early days, I wasn't necessarily as critical of them not raising interest rates quickly enough. Where they were undoubtedly wrong, in my opinion, and I was saying this at the time too, so this isn't Monday morning quarterback,
Mhm.
was they were buying mortgages, keeping mortgage rates incredibly low as the housing market was on an absolute moonshot. So they were undoubtedly wrong there. But more importantly, kind of broad standing, I've just talked myself from a B plus down to a B, by the way. I think they've done a fair job. They got them to where they seem to be restrictive. Now, inflation is kind of doing weird stuff right now. I don't think they need to raise again, but I think they need to keep them right where they are, which I
Yeah.
think is absolutely what they're going to do.
Yeah. So a couple of things. So first off, I have this saying, I think we've talked about it for well over a year, is the Fed broke the housing market. By
Yep.
the Fed getting into the housing market and taking rates too low for too long, it had caused not only purchases but refis to just totally destroy the housing market for probably 5 to 7 years. Right? You're going to see transactions artificially low. Problem. Um, the other thing is I don't necessarily I agree with you. I don't think the Fed needs to raise rates, but god damn it, they have to make the threat. And until Jerome,
I'm fine with that. I'm fine with that.
yeah, they have to make the threat, in my opinion. So let's talk about this. I think we're both in the camp. Actually, I'm in the camp. I always like to hold my guesses, my predictions. I'm going to call one Fed rate cut this year. I'm going to call it November. It could be December. But again, you have a chance. How many rate cuts in 2024?
Zero.
Zero. All right.
Zero. Yeah, the data just doesn't align for the next two meetings. So that gets
Oh
us through
shoot.
summer.
Yeah,
They're
June, July,
they're
gone.
gone. The November is literally on I think it's one day before election.
It's so you have a September meeting, which is
Okay, so
where
you have a
people are.
September meeting, which the data is just not on the table for that yet either, in
Yeah.
my opinion.
And
So
then
the
the Fed
November,
meeting is after. So the election's Tuesday, Fed meeting's Wednesday. So it's the day after.
it just can't happen then, in my opinion. And then December, you're a month after, and it's like it could happen in December. Don't get me wrong, but I just don't see the politicians will lose their shit if if they
Yeah.
do it that close to one side or the other. It just be a nightmare, in my opinion. And I don't
Yeah.
think the data is going to warrant it.
There you go. There you go. It's fun. It'll be very interesting. So again, no rate cut in 2024. Do you think the first rate cuts Q1, Q2, Q3 of 25?
Yeah. So I'm going to take a Fed speak here. It's data dependent.
I
Yeah, you love that, right? Yeah,
love that. I love that.
that's such a political answer. Yeah,
Yeah.
I do think we get one early next year. But I don't have a
You don't
massive
have
amount of
great
conviction
confidence.
in
Yeah.
that. No.
Yeah. 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 Higher for longer, folks. Higher for longer. Lots of stuff going on. Again, I hope the Fed makes the threat of going higher. I don't think they need to. I actually think if the Fed goes higher, they break commercial banks. So I don't think they can go higher.
I tend to agree, and they're squeezing central banks already, or I'm not sorry, regional banks.
Regional
They're
banks,
already squeezing. Yeah.
Woo, big trouble. Taylor, you're amazing. Where can people find you?
You're the man. Yeah, find us on Instagram and on TikTok, whichever one you're on, at Life Goal Investments, 60-second daily videos.
It's amazing, man. Thanks again.